Uncensored, the truth about money. Hi, how are you doing? I trust that you are well. I hope that you're good. Welcome to another episode, Uncensored, the truth about money. Yeah, finally. I always forget to introduce myself. So I'm your host, Kaya Junior Masango. So we are starting a new series called Investment, right? But this episode is the first episode of that series. I know some of you, I'm taking you way back to high school. Some of you are like, come on, I know the stuff, But trust you, me, you do want to listen to this because we're going to go deeper as time goes. And you might actually maybe see some few mistakes that you've been making and rectify those mistakes. And also, very importantly, I recommend that you play this episode for your kids because they need to know about saving and investment from a tender age. This is very much important for them, especially today's episode, because this is investment 101 for beginners. So let's get right into it. Thumbs up, Fede.
Mr. Juju, hey, my man. Today you said your full name. Your names that appear on your ID.
What did I say?
Lindoguhle Kanyo Junior Masango. Biza zonke. Biza Vinambo.
I didn't even hear.
So good, man. So good. Yeah, no, we're talking serious. Yeah, no, 100%, my brother. I can't complain. Good to be part of the show once again. Yeah, thanks for inviting me.
Yeah.
For yet another nice one. We're talking about money.
I just want because this is obviously your forte, right? This is something that you deal with almost on a daily basis. How many clients or clients rather you have on a daily asking you advice on investments or savings?
You'd be quite shocked that when it comes to investing, right? Yeah. Everyone wants to know something, updated news, what's happening out there, where's the right place to put your money, where's the wrong place to put your money, what should I do with the money? Like from people who want to put away 50 Rand every single month to people who want to put away 7-8 million every on an annual basis or as a lump sum. So you get everyone wants to obviously make money, hence why they come to us and then they ask us the relevant questions for them to yield more interest or to get more money from what they're putting currently, or where they can get more money, or which investment vehicle they can use that's safe. So there's various questions and scopes when it comes to investing. But yeah, I hope we'll get into those in more detail with these episodes.
Sure. All right. So first question, so what's the difference between saving your money and investing your money?
So what I normally say, right, but this is my 2 cents. So saving is just basically putting money away for a rainy day. So that's basically money you know that one day I might need that 100 Rand. So let me just rather save it, right? Whereas with investing, you are putting money away with the potential for it to earn interest. So Junior is putting away 1,000 Rand, so that next year it might be 1,002 or 1,005. So now for me, that is what we call now investing. So saving is basically putting money away for a rainy day, and investing is putting money away with the potential for you to get more money in the future.
Yeah. So why can't I just put my money under the bed or something? Do I need to? Why can't I just just put it under my bed or in my?
You can. You can. So that'll be considered as saving. That's like saving your money, right? But now, if let's say we take the pests, your rodents and all these pests that eat kama pepper. Don't put your money underneath the bed. It's better to rather put it in an investment vehicle all banks, all financial institutions, they do have, some sort of a saving or investing scheme that you can be part of, or that you can save in or contribute towards, that can actually yield a bit of interest on your side. So it's much better, just to put money away into a vehicle where you know that it's not sitting dormant. Like if I know I'm putting 1,000 rand away now, it won't be 1,000 rand, in a years to come. It'll be 1,000 rand plus, the interest on those vehicles. So definitely putting your money in the, underneath your bed is a no-go zone.
Apparently, money loses value, Tammy. Would you mind just explaining that?
Yeah. So actually, people don't know this. Some might do. So, every year we talk about inflation. So inflation basically is the general increase in general goods, right?
Sure.
So on a yearly basis, inflation keeps on going up. But with that being said, so if inflation is at 5%, right? So
Sure.
if I have 100 rand now, right? So 100 rand, it will be equivalent to 105 rand if the inflation rate is at 5%. So now it means that every single year, my 100 rand, if inflation is at 5%, my 100 rand is losing 5% on a yearly basis. So my buying power for the 100 rand in 2021 will not be the same, for 2022 and so forth, because of the simple fact of inflation. So that's how your money gets devalued. And it's quite a dangerous thing. That's why we don't put our monies, underneath the bed.
Exactly.
You must always, you must always go for a vehicle, that's yielding or that has an interest rate, that's a bit above inflation. In that sense, you are able to basically make your money and, beat inflation in terms of the interest within that product.
Oh, sweet. What type of investments are there?
So before you go into like what type of investments they are, so the first thing or the first three questions that you need to ask yourself, right, is why am I investing?
Okay.
Why am I investing? Number one. Number two, what is my appetite for risk? So if I had to put away 100 rand, would I be comfortable losing, let's say, 1 rand or 5 rand or 10 rand? That's number two. And number three, what's my time frame? How long do I want to invest for? So once we have all those questions in place, then we get into the different types of investments that one can go into. So there's a multitude of investments, but with that being said, if your time period, if you wanna, let's say, put away money for a year, right? There's your money markets or your unit trusts where it's easily accessible. You can, take out the money as and when, or there's ETFs as well, right? So exchange traded funds, where you are able to. It's similar to unit trust where I can put away 1,000 rand now. In December, if I need that 1,000 rand, I'm able to go into that. And then, but there's asset classes as well. So what asset classes are, it's basically where the bulk of your products are invested into. So there's like your properties, your bonds, your cash, and your equities. So those as well, they go according to your risk tolerance as well. So for example, if I'm let's say a conservative type of investor, I'd put away my money into something like cash. So cash are like your banks, like your money markets. They are more safe, right? The interest rates are quite low, but that's like low risk as well. But if I want a bit of more risk now or a bit of more return, I'll start looking into, your asset classes like your properties and your equities. So investments that are more aligned to those. So those are more aggressive. So that's like, win or lose. So high interest rates and high losses as well. But it's for your aggressive type of investors. So you get, even with investing, you get different types of investors as well. So you get your conservative, you get your moderately conservative, you get your moderate investors, you get your moderately aggressive, and then you get your aggressive investors then. So with that being said, there is a a risk profile. So it's a couple of questions that we normally ask clients that tell us risk appetite. Junior, it's okay. Junior is a moderate type of investor, so put him into these type of investments. But yeah, it's quite broad, like as you're putting it, if you had to answer, what are the different types of investments, all I can say for now is there's short-term investments, medium-term investments, and long-term investments.
Ah, nice. So I've heard this term, right, with investing that one shouldn't put all their eggs in one basket. Why is that?
Yeah. I mean, look, let's say, for example, you were investing in property last year, or retail. Let's say you put your money go Edgar's, right? 2019, Edgar's is doing okay. People are shopping, they're opening accounts and so forth. 2020 happens, coronavirus, right? And all of a sudden, people are not buying new clothes anymore. We are confined in our own spaces, and we can't, go out and, shop, go to malls and, do shopping. And now your investments go at gas, then they crash. Now Junior will lose all his money that he's invested into Edgar's. But now if Junior had, let's say 25% into Edgar's, put another 25% into, let's say, Facebook, put another 25 into, like a rental company, and another 25 into a bank, for example. If one of those go down, Junior will not lose all his money, right? And that's why it's important to diversify. So we call it diversification. So you don't put all your eggs in one basket, because if something happens, at least you know that you've got another plan or plan B, to leverage your funds from. So that's why it's important to always invest in different, asset classes or vehicles.
Sweet. So in your opinion, when is the ideal time or stage to start investing?
Now, boss. Now. You gotta start now. There's no better time like the present. The reason why I'm saying that, right? We call, when you go deep into investing, there's this thing they call timing the market. So I know now I need to, wait for these stocks to go up, and then sell them, or let me wait for them to, be cheap and then, buy them. My thing is this: investing is it's a lifestyle. Treat it like that. It's something that you get into and you get used to, right? So if I'm gonna, let's say okay, one day, I'll invest when I've got money. It's dangerous, because that one day may never come, or that one day may find me in a worse off situation. So the little that you have at the moment, whether it's 5 rand, my guy, or 10 rand, it's just that discipline of saying, you know what, I earn, let's say, 100 rand. I'm not going to chow all of this 100 rand. I'm going to put at least 5 rand away and make sure that, in case of something happens, I've got something put away on the side. So that's why I'm saying that investing is more of a discipline, more than it is, a thing that we must do. So for me, it's compulsory for everyone to have like an investment vehicle or even a savings pocket. So get into that discipline, putting money away as soon as possible, and start getting more attuned into, more other investment vehicles.
Thank you for actually mentioning that, that you can start investing whenever you've got money. Because my next question is, do I need a lot of money to start investing?
Not at all, my guy. I mean, there's platforms where you can save like from as little as 100 rand or 50 rand every single month. Look, you don't need to have a lot of money. All these, let's say, wealthy people, they started off with a little money that they're putting every single month. Like I was reading this other book, and this guy was saying that, from his first paycheck, he was tithing like 10%. And then with the other 10%, he was putting away every single month, And after 20 years, he was able to buy himself like a very, very nice car. Just from that 10% that he was putting away every single month. And this person didn't even earn a lot. But hence I say that it's just the discipline of you saying that, you know what, I'm not gonna, chow all of this money. Let me put this money away so that I can have more money in the future. So hence I say that it's not even about money. It's basically the discipline of you opening an investment vehicle and putting money away.
So
Yeah.
since when you are a financial advisor, ne? So I need to know, ne? So when you guys are helping us to invest our money, do you guys also benefit from our profits?
Of course.
Of
It's a job.
course.
Nothing's for Mahala, Chief.
Yeah.
So with that being said, financial advisors, they charge a commission for the job that they do. You get advisors that are fully commissioned, so they earn from advising Uchunia into investing into different investment vehicles. You get advisors that are salaried, so those they advise Uchunia on which investments to choose, but they don't necessarily want to make money for themselves because they are salaried. But mostly 90% of advisors out there, or 80%, they are commission earners. So they can charge up to 3% upfront with your funds. So if Uchunia comes to me and says, "Listen, Tammy, I need to invest R1 million, right? I can charge Uchunia up to 3% of that R1 million, right? So I can charge you up to, let's say 300. It's 300,000 of that amount of that million. Or they can also charge you an ongoing amount. So the ongoing amount with certain platforms, it's limited to like 1.5%. So what they do is that they spread that 1.5% into a monthly commission, right? So yes, advisors, they do charge commission. But with that being said, you are also able to negotiate or meet each other halfway when it comes to them charging your commission. And that's what people don't understand. Some advisors are like, I know, sorry, this platform charges 3%, but yet you are able to say, no, listen, I can pay you 5%. I can pay 1.5% and not 3%. So you are able to negotiate the fees that advisors charge on investments.
Yeah, but do you yeah, but then do you guys openly tell the client that when you're signing the client up?
Yeah, so according to the Phase Act, you have to disclose all commissions that you are getting from the client. So I need to tell you, Junior, listen, I'm going to charge you 3%, which is equivalent to 300,000 from your investment, right? So that Uchunia is aware of the decision that they're making. So previously, long time ago, advisors never used to do that. But now, what's happening over and over again is that they trying to make the industry a bit more fairer to the clients, because ultimately it's the clients that are important and they need to be safeguarded. So we need to disclose all fees and commissions that we charge clients.
Nice. So is this included, like, when, like, I know with like your EFTs or your trust funds, there are like service fees. Is that inclusive?
Yeah.
Is that included in those fees?
So that's a nice question. So with fees, you get administration fees, you get platform fees, you get management fees. So administration fees are like, as the word says, administration. So there's someone in the back who's doing the work.
Yes.
And then management fees, it's those investors now who are, or the traders, if I may put it that way, who are making Uchunia that money. And then you get the platform fees. So like with platform fees, it's the fees you pay to be in that fund. And then on top of that as well, then I come as a financial advisor and charge you my fees. Yeah. So all those, yeah. So all those are total, they call them total fees. So it comes, sometimes they present it as a percentage. They'll say, okay, Junior, all of these fees combined like equates to, let's say, 4 or 5%, including the financial advisors' fees as well. So yes, they do include them overall, but as I said, that we have to disclose all the fees that are being charged on your money, and not just the fees I'm taking, let's say, as an advisor's commission, but we need to tell you what the platform fees are. We need to tell you what the administration and service fees on that investment are.
All right. Whew, thank you so much for listening, guys. We really hope that this will help you. So this was Investment 101. We're going deeper. Next episode, we're going deeper. So please do tune in on the next episode. Thank you so much. Please don't forget to follow us on Instagram, uncensored_the truth about money. Thank you so much. We love you. Bye.